Hey, how's it going, guys? I wanted to do a recap for you in today's market. So this is going to be everything that happened in today's session over here. Sorry, my chart's already marked out from the trades that I took today, but I'm going to go ahead and break it down for you guys. So let's start with the daily time frame. So the daily time frame, we can see this is Wednesday's high and Wednesday. So this is Thursday. So Thursday's high, Thursday took out Wednesday's high, so we were bullish for the day. So if you go down to the 4 hour, you see the market structures higher low, higher high. Same thing over here. You can see the structures respecting each other from this over there to right there. See, you got a 61% retracement market pushed up. So 15 minutes, same thing happened as well. On 15 minutes for today, before the market opens along the session, we had this huge candle breaker structure to the downside. As you can see, the momentum just slowed down in the market and stuff to continue pushing downwards because we still had this, what they call this order block over here. The market came back to yesterday's open in the market session. So if you go down to the 5, same thing as well happened. 2 minute. Let's go to the 2 minute. So after this break extraction, we had to the downside, right? We were waiting for a retracement. And what we had was, just weak structure. So we had this weak break structure to the upside. There was no foundation. We had this break structure. The market came down, took out the slow again. So now we had this order block over here. But remember what we said, every time we have a break structure with the wick, we want to see if the order block is going to hold. But if you look over here, the order block didn't hold. It just took out the high. So then this turns into a bullish breaker structure. So we had a breaker structure to the upside, okay? And this was the low over here. As you can see, the market came back down, held its own. We saw a free push to the upside. So this would affect some people in and out, but the market then went out to, take out the overall low. We then had this breaker structure as well, which is completely fine. Then the rule structure happened. So then we had this breaker structure to the upside. Now this is the foundation. So something like this we can trust. So we had a breaker structure to the upside. This is the order block over here. The reason why this is bigger than this one is because we used the 5 minute order block instead. Exactly. So we had this 5 minute order block and we did not get a 50% retracement. So if we go back to the 2 minute, this order block, then nothing came back over here. Then the market pushed up. We had this order block over here. The market came back into this order block. As you can see, the market came back into this order block. And then we just went out. We came back in first. As you can see, momentum change. We pushed up to the upside, but there was not enough momentum to break the upside. So the market just went around and came back down, took out that low over here. So this became a breaker structure to the downside. Okay, and remember this was a breaker structure of the week. So we go back to the order block over here and wait for a reaction. Every time we get a breaker structure to the upside or downside, if it's a wick that breaks the structure, we go back to the order block and we'll try to find a reaction before we go in and buy or short the market. So we broke the structure to the downside and we're looking for a reaction inside this order block to short the market down. But as we can see, instead of we didn't get any reaction till the market took out that high with a bunch of wicks as well. So then this is the structure that we were looking for inside this bullish order block because we took out that high. We want to see if there's enough momentum to push the market back up. So we see the momentum dry up over there, and we just see lower lows, lower lows, lower lows, lower lows, lower lows, lower lows. Then we take out this candle over here. Then we become a higher high. So we don't want to get in on this candle on this break to happen over here. We want to get in on the next candle. So if we got in on this candle, we would have got in right there and targeted this high over here. So we would have made 115 ticks if we got in right there on that high. And stop loss would have been under this low. So 63 ticks to make 115. If you're scalping wise, that's not bad at all. That's not bad at all. It's completely nice. So that's not a bad trade. Then we had another breaker structure to the upside over here. Okay, breaker structure happened over here. What do? We go ahead and again convert this into the new order block we have over here. Just to be safe, let's use the 5 minute order block as well. Okay, right there. Go back to the 2 minute. Okay, so this is the breaker structure. Oops, sorry. This is the breaker structure that happened over here on the 2 minute. So nothing happened. The market didn't come back. Now what we did have is we had a small retracement and a pushback. We had a breaker structure first with the wick. Then this candle closed above the wick. So this is a strong one. So we go ahead and get in right here on this breaker on the order block over there. Put the stop loss underneath the low, risking the 44 ticks, and we are targeting the overall daily high. As you can see, Wednesday's high over there. That's what we're targeting. So if you got in on this trade over here, you market, you'd have made some money on this trade. So a beautiful trade. And there were multiple entries on this one because we had this first order block over here, as you can see, market tapping. Then we had another order block. So if you weren't afraid, if you risk proper, if you risk $100 an entry and you're going for another $100 risk over here, so automatically $200 on this trade, and you targeted this high, yeah, you'd have made almost a 9R, so 9 risk to reward today on this trade. So let's do the math. So create limit. So if you had gone in with one contract on the trade, you'd have risked $235 to make 995 twice. So you man, that's about $1,800 on that trade. So that was something that happened as well. Then the market pushed up. Then we had this breaker structure with the downside. As you can see, first we broke with a wick. Then this kind of closed underneath it. Now we didn't get a retracement back to the order book. But we did get is a 50% retracement. So we see we tapped into this wick and we pushed down for a better entry. You would have gone down to the 1 minute. Yep, you would have gone down to the 1 minute. And as you can see, this candle took out this low right there. So we wouldn't get it on that break. We'd get it on the next candle. So you would have gone in right here and targeted this low over here. Or wait till the market took you out at 110 ticks and your stop loss would have been 58 ticks. So that's almost a 1 to 2. So that's not a bad trade at all. So that was something to pay attention to over there as well. That would have been a nice trade. Let's go back to the 2 minute. Okay. Sorry, I know my chart is a little bit messy, but I'm trying to leave one of the lines in here so you guys can see. Then we had another breaker structure as well. First with a wick, then a wick, then we had this close over here. So now we have this order block over here. If we go ahead and draw it out. So this is the order block over here as well. This is the overall order block over here. We had this ones as well, but so most of the time, I usually draw them at just the last candle. But as you see, we don't get a full retracement. But what we can do is go ahead and use that 50% retrace. Retracement. Okay. You always want to draw your order block and use a retracement as well, just to be in case. So we had to get up to 71% retracement, then we push down. So if we go back to the 1 minute, we had a break of structure. We pushed up, then we had to scan to break it. Just to be safe, we wouldn't get on the first candle. We would have gone on the second candle. So we would have gone in right here and targeted this low, 65 ticks. Okay, we got right there. 71 ticks, so kind of a negative risk to reward. But like I said, this is a scalp. I mean, a scalp is not always going to have a positive risk to reward. It's always great to, but it's not always going to. But like I said, we're trying to get something out of the market and get out. We're not trying to hold a trade for a long period of time. So that would have been one as well. Okay, so let's go back to the 2 minute. Okay, then we had a breaker structure to the downside. As you can see, we had the wick broke the structures, wick. We couldn't close in here. So what we do in a situation like this, we go ahead and draw our order block as well, and wait to see if we can find any reaction. Kind of like how we find a reaction in the retracement. We would wait to find a reaction here. As you can see, all we have in here are just bullish candles. So we can see high, high, high. We don't have any bearish candles in there. So the market broke structure over here. Then we had this candle took out the low, almost took out the low. Then we pushed up. So this has become a whole move. So we had this breaker structure down here because if you go to 1 minute, this is the actual structure that happened. Yep, on the 1 minute, this is the breaker structure that happened. Market came back to retest and push back down. Now the 2 minute, seeing something like that, if you want to be more safe, let's say you don't trust this breaker structure where you would come back down to this order block, which starts over here. I like to put it at the wick so it makes it easier so you guys can see my chart. So you put it over here, and as you wait to see if there was any reaction in here. But if you notice, we don't get any reaction. We just get straight flush to the downside. So down, down. So no reaction happened here. All we had was just down candles. Now over here, since we just know we just broke the structure to the downside, we're gonna put this right there. Break a structure to the downside. Okay, now we're looking for sales, correct? So we're going to go ahead as we drew our order block out, which is this over here. Let me take this off. We drew our order block, which was this candle over here. Now go ahead and draw a 50 retracement too. Okay, there we go. So as you can see, the market pushed up into this. We got a 50% retrace, 61, 71% retracement. Let's go down to 1 minute to see if we can find any good entries. Beautiful. So what do we find? So we had up candle, up candle, up candle, up candle. Then we took out this low. To be safe, we don't enter on this break. We enter on the next break. So which should be this candle over here. So we get in right here. Stop loss at this high right there, and we target the overall low. Yep, almost a 1 to 3 restore. So 1 to 2.76, which isn't bad. So let's see. If you had risked one on here, yep, you'd have risked 235 to make 995. Yeah, sorry, 360 to make 995, which isn't a bad trade at all. Um, so that's what happened over there. As you can see, we sit on the 1 minute. Now, on the 1 minute, we have all this breaker structure, and you like I said, so something like this, you get in right here, you can show your stop loss every time. So stop loss come over here, then stop loss, you move stop loss over to this high, and to this high. Then you see the flush that takes out the low over there. So that's why I have this loans on here, just to show you that the market held every single low one of these lows. So if you go back to the 2 minute, exactly see everything that happened. Then we just had this small move that happened over here at the 1:50 p.m. We had this breaker structure to the upside. We had wicks breaker structure. You draw your order block over here to see if the market holds it. So yeah, breaker structure happened to the upside as well over here. We have a candle close, so you can try to go in for a buy trade, but you would have lost this trade because I see the market push back down. So then we would have been looking for what's it called? We would have been looking for a sell order block over here. As you can see, if you get in for a trade over here, the market comes in, plays around, and starts to push back down. Then we have this breaker structure over here. So if your stop loss is right there, you would move your stop loss over here because we had a breaker structure. You're expecting the market to come back to retest and push back down, but the market doesn't do it. So it just flies up and takes out that low, which is completely fine. Losses happen in trades. Um, I mean, I guess that would have been it for the day. But like I said, you would made enough money on all the trades you took here for you to have some money to spare some money to lose. Because what if you have won that trade? You never know until you take the trade. But I mean, that's it, guys. I hope you guys liked the video. If you have any questions, please comment below, and please like and subscribe. Thank you guys so much. Bye.